Basic terms of accounting. So let's get started. First one is cash. Cash means both cash in hand and cash at bank, and marketable securities which can be easily converted into cash. So cash here doesn't only mean cash in hand or the cash which we have in our pocket. Cash at bank, that is the bank balance, also comes under cash. And the marketable securities. What are marketable securities? Marketable securities here means the securities which you can be easily converted into cash. Example, we can take stocks, bonds, preference shares. All these come under marketable securities. It is a part of a current asset. Next is business transaction. Business transaction is an economic activity of a business that changes its financial position. Okay, here changes in financial position means it is an economic activity. Whenever we say economic activity, it means that we are exchanging goods and services with money. That comes under economic activity. Okay, suppose I am dealing in chocolates. Okay, now when I'm selling the chocolates, I'm getting some money from that person. Okay, that money helps me in changing the financial position of my business. Okay, whenever any business transaction takes place, it it results in some of the assets, liabilities, or capital. Next is event. Event is a consequence or a result of the transaction. See, I have told you that I am dealing in chocolates. When I am selling chocolates to the customer and he is paying me some money, that money is a result. That because I am selling the chocolates for the purpose of profit, okay, that profit is the result of the transaction. So that is an event that comes under event. Next is capital. Capital means the amount invested by the proprietor in the business enterprise. See, whenever we think about a capital generally comes in our mind is about the money only. So it is not only about the money amount, maybe in the form of cash, goods, or asset. Because we don't only need money to start a new business, we need land also, furniture also, goods also, okay, to run the business. Next is trade receivable. Trade receivables means the amount receivable on account of sale of goods or services rendered by the company in the normal course of business. I am doing a business of chocolate. Okay, I am selling goods and services. I am selling chocolates to the consumers. Okay, in exchange, I am getting money. That is the amount receivable. Okay, this is called trade receivable. Now, when we do business, some of the business we do on cash basis and some of the business we do on credit. Okay, so 95% if we say our business runs only on credit basis. Okay, so on credit basis, trade receivables actually doesn't include cash. Okay, it includes credit items. That is why it includes both debtors and bill receivables. Okay, when we are selling goods to the customers, okay, there are two types of customers. One is the debtor whom I have a very good relation, so I am selling goods on credit. Bill receivables includes those customers whom I don't know, and they will give me a document that yes, we will return the goods on that date or on after 6 months or after 2 months. That also comes under trade receivables. So trade receivable includes both debtors and bill receivables. Next is trade payables. Trade payables means the amount payable on account of goods purchased or services taken in the normal course of business. Trade payables is just the opposite of trade receivables. In trade receivables, we were selling the goods and services, and under trade payables, we are buying the goods and services. Okay, it includes again the same thing, both creditors and bills payables. Next is cost. Cost means it can be termed as amount of resources given up in exchange for some goods and services. When I'm saying that I'm dealing in chocolates, okay, when I'm selling the chocolates to the customer is paying 100 rupees for 5 chocolates. That 100 rupees is a cost for that buyer, and that 100 rupees is a profit for me or a revenue for income for me. Okay, so cost is whenever buyer buys something, okay, it means that he is paying the cost for that commodity. All right, next is voucher. Voucher is a document which provides the authorization to pay on the basis of which the transactions are first of all recorded in the books of account. It specifies the accounts to be debited or credited. Voucher is like a bill. Okay, it specifies whether it is to be debited or a credit. It depends. It varies from firm to firm. Next is revenue. Revenue means the income of a recurring nature. Recurring nature here means the regular income. I am telling that I am dealing in chocolates. Okay, so chocolates is the only my business. Okay, now side by side I am also earning some income from like rent or commission. I'm getting dividend, but that is not my main source of income. My main source of income is that I am selling in or I am dealing in chocolate. So that chocolate, the revenue from chocolate will come under revenue, under the head revenue. Okay, revenue from operations. Now it consists of the amount received from sale of goods or services, and it also includes receipts of rent, commission, interest, dividend, etc. Next is livestock. Livestock means the domestic animals. Under livestock we cover the domestic animals such as cattle, horses, etc.